So this is not a conspiracy theory. Crypto is actually controlled by an elite few who control all the charts. They control how far a chart runs. They control how far a chart goes down. They control when it runs, when it runs, and you end up chasing them and being their exit liquidity. So in this video, I'm going to expose who these people are, what their incentives are, the game they play, the hidden architecture behind the curtain, and how you can actually understand this architecture so that you can benefit yourself. So let's get right into it. Crypto's evil puppet masters exposed. How a tiny elite control everything. The hidden architecture of control. Contents. The puppet masters. Who are they? How control really works. The incentive engine. What's the incentive engine that makes this so malicious, in my opinion? We're going to go in detail into the incentive structure. The narrative machine. How they generate narratives in order to extract liquidity from you. The player's defense. What you can do to defend yourself. And also we're ending with the illusion of freedom. How freedom is kind of a guise in crypto. There is no real freedom. You're operating in a structure and you either know how to play it and accept it and profit from it, or you lose money. So let's get into it. The puppet masters, how control really works. Market makers as hidden architects. Market makers are the hidden engineers behind most crypto charts you trade. They don't just add liquidity, they design the flow of it. They dictate how price behaves, how high a coin runs, how deep it dips, and when it rugs. They are the invisible hand that you don't see shaping the charts. To most traders, it might just look like organic price action. To insiders, it's a controlled environment where nothing moves without purpose. Let me give a little bit more context. Market makers literally move charts. Coins give supply to market makers, and market makers move the chart to make the chart look nice, to make retail buy. They literally decide how far it goes down, how high it goes. If you remember Solana meme season back in, I think it must have been October 2024, all the way to about January 2025, market makers were on 99% of those meme coins that ran, and they were extracting tons of money. They were making so much money, and they decided when it topped. And unfortunately, a lot of people I know lost a lot of money from this period. So this is why it's really important that we're going through this. Launch engineering. Every token needs a launch, right? It starts from somewhere. And for these market makers, every token launch begins with supply control. The goal is simple. Make sure insiders own the majority of supply before anyone else even knows the coin exists. And this gives them absolute dominance from day one. It means that they're the first people to buy the coin, and this also guarantees that they can't lose money. Market makers launch and give the illusion that it was an organic launch. They'll wash supply to not let bubble maps show, and they'll choreograph the first few trades so that people don't even realize they're behind the scenes. It's the invisible hand, okay? But it's not. It's all an engineered illusion, created and built of insider certainty, created to extract from you. So you think that it's fair, and then you buy in and extract from you. Controlled distribution. Once supply control is reached, the second act begins. Teams can't just dump openly, right? So teams that have supply, they could just sell the tokens. But instead, what they do, the market maker sells on their behalf, and this is their primary job. Job number one for a market maker is selling on behalf of the team. They trim the tops. When I say trim the tops, I mean they sell the tops. They defend the bottoms, so they do buy a little bit at the bottoms if they're a good market maker. They maintain healthy price action to attract new buyers. The chart becomes like a marketing tool. It's a visual narrative of the strength of the coin designed to bring in liquidity. Traders think they're reading momentum. Traders think that they're reading a chart that looks bullish, but in reality, they're reading the market maker's script. The extraction cycle. When KOLs start posting, the exit has already started. Market makers sell into hype and then defend the pullback to rebuild trust. And this dance continues until the majority of supply has been distributed and retail is left holding the bag. I hope this makes sense. KOLs post, the chart goes up, they sell the tops, they extract from you when the KOLs are posting. That's correct. The KOLs are literally stealing money from you. Chart goes back down. They defend the bottoms sometimes, and then they do that again. They get the KOLs to push it again, and then they extract from you again, and it carries on going down. And each rally funds the next sell-off. Does that make sense? So like they sell the top and then they defend the bottom. Each recovery is just maintenance for the illusion of life. Retail believes it's buying strength. In truth, it's buying exits for puppet masters and KOLs who are selling out their audiences. Profit split. Around 20% of every single buy gets sold back into the chart. So if you put $10,000 into a chart that's being market made, the market maker will sell around $2,000 into the chart straight away. And the team and market maker split the profits that the market maker makes. Probably about 80-20. When retail sees nothing but a slow and invisible bleed, okay? Does this make sense? The market makers and the teams literally sell on the chart and they split the profits. And this is why so many charts die the same way. You see a steady grind, fake support, then a sudden collapse. Extraction never looks obvious until it's over. It reminds me a little bit of the 2008 housing crisis, when you had all of this bad debt and you had the mortgage market holding up and no one realized that it was actually a hollow market with a lot of structural damage inside it until you had the pop. And that's what happens with crypto charts. You have this chart and it looks fine, but in reality it's being extracted from 20% at a time, sometimes more when they sell the tops. You don't realize it until it's too late, when it falls down through the support and you're down 80% before you know it. The illusion of control. Even the puppet masters aren't immune to their own game. Sometimes they believe that the coin will keep running, only to watch it unravel. They control liquidity but not destiny. So sometimes they have overconfidence and they don't even realize that they're hollowing out the chart and they think it's going to carry on running, but it doesn't. The same way the people that made all the bad debt in 2008, a lot of them didn't know that they were messing up the market that much. They didn't realize that they were starting what was the beginning of one of the biggest financial crises in the whole world. So in the end, the system consumes everyone who forgets that the control in crypto is always temporary. And this is a nice chart showing you what happens. So you get the launch, chart engineering, you get the supply control, and then you get extraction and retail exit liquidity. This is what happens every single time. The incentive engine, volatility as revenue. Every major player in crypto profits from volatility. Exchanges earn spreads and liquidations. Teams sell into hype to fund themselves. KOLs monetize engagement, clout, and affiliate deals. Market makers profit directly from the churn itself. They make money whether the price goes up or down. The system doesn't thrive on truth. It thrives on liquidity and volatility. That's the first thing we have to understand in order to really understand the incentive engine. Activity over accuracy. Market makers and exchanges don't care who wins. The only goal they have is to keep the trades flowing. Volume is their oxygen. They need liquidity flowing through the system. In order to get liquidity, they need traders to participate in it, which leads me to the last bit. They're aligned against you. The crypto ecosystem runs off consistent liquidity movement. Teams need buyers, KOLs need attentions. If you stop trading, the music stops. So the system will do anything to make sure you don't. Every update, every airdrop, every new meta is made to pull you in so the market can thrive off your participation. And that is the only way that they make money, okay? They thrive with your participation. So they're going to manufacture narratives. They're going to make a new meta airdrop. They're going to make a new update so they can maximally extract from you. That's the game. It's mechanical. It's not malicious. No, it's personal. We see a lot of things in the world that I don't necessarily agree with, but it's just the way it is. It's not personal. It's not good or evil. It's just incentives. People simply follow what they're rewarded for. And unfortunately, this leads to sometimes honest actors ending up being complicit in the extraction loop. The market doesn't need a villain. It just needs you to react and play the game. So this is the incentive stack pyramid. Every level feeds the one above. You've got market makers at the top, then you've got exchange and teams, KOLs and funds, and then retail. And this is unfortunately the exit liquidity. And these are the puppet makers at the top. The narrative machine. Stories as weapons. Narratives are the delivery system for liquidity. They're not accidents, they're campaigns. In fact, this is true of 99% of narratives, even outside of crypto. I'm not going to get into them. Probably get demonetized. Most narratives are engineered, not organic. Teams, KOLs, market makers coordinate behind the scenes to decide when and how a narrative emerges. The purpose isn't the truth. The purpose isn't truth. It is to increase liquidity and volume in said sector, like I said before. So once the story spreads, capital flows, and when capital flows, insiders can sell and profit. Execution through hype. By the time a narrative reaches Twitter, it's over. Insiders are positioned, KOLs are paid, market makers are already selling into the wave. Retail thinks it's early, but it's actually the exit. And the first tweet you see about a new trend is rarely discovered. It's distribution dressed as an opportunity. Information is power. Whoever controls the timing of information controls the emotion, and market makers control everything. They control the emotion, they control the information, they control the charts. And this is why they are the biggest puppet masters. So, your defense, what can you do? Awareness is power. You can't fight the structure, but you can stop feeding it. Every price move, every narrative, every opportunity has a sponsor. When you see a surge, ask yourself, who benefits the most? When you start thinking in incentives, you stop reacting and start reading intent. You can start thinking like them. Market makers exploit greed. Professional traders exploit fear and exhaustion. They buy when liquidity is gone, when the sentiment dies, when everyone's certain they're over. And funnily enough, when everyone's certain that it's over, this is the most likely time for market makers, KOLs, and the puppet masters to spin up new narratives. So this is the time you should be buying. I always tell you guys, don't buy in greed. Buy when it's exhausted. Buy in fear. Detachment wins. Emotion is the retail tax. Conviction turns into coping. Coping turns into loss. The best traders stay detached. Even when the move goes against them, they care more about the process than prediction. Detachment isn't indifference, it's control. You can read the market if you're inside it. You can't read the market if you're inside its emotions. And survival over protection. You don't need to win every trade. You just need to survive for the next cycle, and that's how wealth compounds. Freedom of illusion. Unfortunately, crypto sells freedom but hides hierarchy. Anyone can play, but few control the rails. Unfortunately, this is the reality of the world we live in. Historically, an elite historical few take control of a permissionless ecosystem and profit the most of this. This is exactly what we saw with the Soviet Union under the Bolshevik Revolution, the Russian Revolution. We saw an elite few take full control of a country and extract from a nation, cause famines, killing millions of innocent people. Unfortunately, this is what happens in every system. It's just the human condition. Market makers, exchanges, and insiders still shape every move. The decentralized myth just makes centralization harder to see. The centralization trap. Freedom creates confidence. Confidence creates predictability. Predictability is exactly what control systems need. The more empowered traders feel, the easier it is to farm from them. So decentralization isn't false, it's just incomplete. The infrastructure may be open, but the incentives are not aligned. And this is what we see with meme coins. We've seen meme coins. Elites take over the meme coins and start extracting from the meme coins. It's unfortunate, but we see it. Exposure is the cost. Access always comes with a price, and in crypto, that price is exposure. You're free to trade, but freedom itself is a trap. The market doesn't punish ignorance, it monetizes it. The only real protection is in an understanding. So the paradox of power is, the closer you move to control, the more you realize how little anyone actually has. Even whales get liquidated. Insiders misread momentum. The illusion of total control sustains the machine, so consumes everyone inside it eventually. The market makers control liquidity, but not destiny. And once you understand how they move, you stop being the exit and begin playing the game. And that's where the money is to be made. Thank you guys. Have a lovely day. Bye-bye.